What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this evening. So what we're going to be covering in this update is a little bit of the Ortex short interest and utilization data, again talking about that cost to borrow number and looking at the securities lending market to just see how crazy it was today with the overall market craziness that we were seeing throughout the trading day. Then we are going to get into a little bit of options chain analysis going into tomorrow, just because we did see a really significant increase in the share price of AMC today. But the two most important things that we need to talk about is that really large margin calls have already started going out for a very, very specific reason. Now, if you guys have heard me talk about this in the past, margin calls like this typically are not reported. So it's a really big deal that margin calls are actually noteworthy and newsworthy things that these big media outlets are starting to talk about. So we're going to go through this, how this could potentially affect what we have going on in our market at AMC. And then we need to get into this situation surrounding the potential for AMC to be 54% owned by institutions. Now, I know this question was asked a lot today on the stream. We're going to go over exactly what my thoughts are on this and kind of a conclusion that I'm kind of getting from this data that a lot of people are presenting. So before we get into all of that information, if you enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, you saw it again today, you saw it yesterday, you've seen it pretty much every single trading day. That 1348, that trading strategy that we're using, works very, very well. And again, we still have that free offer going on. If you sign up for the premium, you'll get all the alerts, all the private live streams. You get the crypto alerts, the stock alerts. We're working on 2000, all of the Russell 2000 stocks, getting onto the alert system on the daily time frame so that if you cannot trade options, you can trade the shares. Make sure you guys check that out. If you want to join the premium, get all the alerts, the live streams, you can get that for free as long as you cancel before March 1st if you do not want to continue. So AMC right here closed the day at $17.68. There we go, everybody. Up 12.4% on the day. After the news broke last night about this war breaking out, a lot of people were very, very bearish on the overall market. The market opened and everything just went on an absolute moon mission the entire day. Now, when we come over to the Ortex data and we look at this utilization number right here in the cost to borrow, let me just give this a quick refresh. 100% utilization right here, 1.43% average cost to borrow. Again, that number really has not moved, but we are seeing 21.08% estimated short interest with a net borrow of shares. So you take the borrowed shares and subtract it by the return shares of 794,000 shares today. So there were a lot of shares going out on loan for AMC. Now, a lot of these, 1.25 million of these borrowed shares went out before the market even opened. So the shorts were kind of preparing to try and push this thing down even lower throughout the trading day. So that's kind of what we have in the Ortex data over here. We got 108 million shares estimated to be sold short and 116 million shares on loan at the current time. Now let's get into this margin call situation that I find very, very interesting. So when we come over to this article right here, UBS triggers margin calls as Russia bond values cut to zero. Swift rival Pictet also cutting value of bonds in portfolios. Investors who can't meet calls risk seeing liquidations. This is directly from Bloomberg right here, people. So these are happening right now. So scrolling down a little bit further, UBS Group AG triggered margin calls on some wealth management clients that use Russian bonds as collateral for their portfolios after marking down the value of the debt issued by the country and its corporations. This would be very, very similar to if UBS then were to say, no, we're no longer accepting U.S. treasuries as collateral, which again, if you think about what we've seen in the past, U.S. treasuries are posted as collateral all the time. The Swiss wealth manager is calling on some investors to either add cash or securities to their portfolio after cutting the lending value on some Russian bonds to zero. People with knowledge of the matter said, while sovereign bonds still trade at around 50 cents on the dollar and many Russian corporate bonds are well above that, UBS's move signals it essentially will no longer accept them as collateral. Now, coming down a little bit further, this is where it gets a little bit interesting. UBS, which says it caters to half of the world's billionaires, had 447 million of banking products, including loans and guarantees to Russia, in 2020. Wealth co-heads, these two individuals right here, 2 years ago, set a goal of doubling assets under management for the Central and Eastern Europe wealth business, which includes Russia. So when you think about what's going on here, what they've essentially done is all of these really big institutions and even some really, really high net worth clients who are trading on margin, investing into any investment product that they have, a swap, or even any individual equities on margin, are getting seriously hit by these margin calls. Because think of this. Let's say you then go to a banking institution and you say, hey, I want to get leverage on this position. And they say to you, okay, we accept this, this, and this as collateral. And let's say we're going to need 20%. And we will give you a certain amount of leverage. Now, what happens then, you then go out, buy that collateral, and you post it to them. But what happens if they then come out and say, we no longer accept that as collateral? Then you're stuck with a worthless asset and a giant margin call. Now, dependent on what these individuals are capable of doing, what kind of money that they have on the sideline, they might be able to go out, get some more collateral, give it to UBS. But if not, they're going to be forcibly liquidated out of their positions, meaning that UBS will go out and then either cover the shorts that these people have, which could be pretty good for AMC and GME if some of these institutions or individuals are short these stocks right here, or they're going to sell a lot of their long positions. Now, this kind of reminds me of the Viacom situation back with Archegos when Bill Huang was wildly over-leveraged with total return swaps. So we're going to have to see how this starts to play out. The margin calls seemingly have gone out today. That's what it looks like right here. And they do have some time in order to figure out how to meet this margin calls. I believe it is a 5-day time frame. So guys, this is a really interesting development that I wanted you guys all to know about. And now we really need to get into this other situation of this 54% AMC institutional ownership number. Now, I have a couple of thoughts on this, but let's just kind of get into some of these numbers right here. So when we come over to Fintel, so this is AMC's institutional ownership page right here. They say that institutions have long shares of 187,672,508 shares. Now, that would put us up to about, let's see, 187 million divided by 500 million. That's about around 40%. So that's kind of where this number is right here. But it's also saying it's excluding 13Ds and 13Gs. That could be an interesting dilemma that we have here, that some of these filings that are reporting shares that institutions own are not being reported. But what exactly is a 13D and 13G? When we come over here, the Securities and Exchange Commission, SEC, Schedule 13G form is an alternative filing for the Schedule 13D form and is used to report a party's ownership of a stock which exceeds 5% of a company's stock total issue. The 13G is a shorter version of the 13D with fewer reporting requirements. So there's the 13G, there's the 13D, which are pretty similar, and then there's the 13F, which are those quarterly reports that we see from institutions. So when we scroll down over here and take a look at some of these, let's just sort this by the amount of shares. We'll then see Vanguard and BlackRock at the top, 47 million and 42 million right here. But then we come back up here, and we can see that their most recent 13G forms have 47 million right here, 42 million right here. So they do look like they are matching up pretty closely with the 13Gs and the 13Fs. So it wouldn't really make sense to double count these to get up to that 54% ownership, but there's a key but here. It's very, very possible that what we've been seeing with AMC and GME and all these other stocks, that the amount of naked shorting or synthetic shares, the short exempts, the failure to delivers that have been pumped into this market over the last year, and honestly, most likely a lot longer, that we don't necessarily see on the reported data, because at the end of the day, if you have a share in your account, you can't tell if it's synthetic or a quote-unquote real share. It's going to look the same. You're going to have the same voting rights. So it is entirely possible that when you think about the numbers that were released in the past, that retail investors owned 80% of AMC, that technically that 80% number of the 513 million shares is right around the same, but institutions were just buying more of those quote-unquote synthetic shares. So it's possible that we still own right around that 80% number, maybe a little lower after the sell-offs with the paper hands that we could have seen over the last 6 months. But it's also entirely possible that these numbers haven't really changed, and we are just seeing the reflection of what the ownership percentages are based on what's supposed to be actually out there, not based on what actually is. So hopefully a lot of this is starting to make sense to a lot of you guys. Now, the last thing that I really want to touch on in this video is just a little bit of options chain analysis going into the end of the week on AMC. So when we come over here, this is going to be the options chain, and you can see here, nothing really crazy is sticking out at me. We have a decent amount of contracts at 18, only 8,000. We have 20,000 almost at 20, which is pretty decent, but we struggled around those levels in the past. And when we switch to the put side over here, yeah, there's a decent amount of contracts, but nothing too crazy to really cause a significant gamma. So that is mainly going to wrap up this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great evening, and I'll see you guys in the next video.